All right, let's talk about it. The story that has everybody in finance buzzing. Bitcoin's unbelievable record-shattering price surge. It has been a completely wild ride with billions, and I mean billions of dollars flooding the market. So let's jump right in and unpack what in the world is going on. Just look at that number, over $125,000. Bitcoin didn't just squeak past its old record. It absolutely demolished it. But, a number this big just raises even bigger questions, right? Like, how do we get here this fast? And what does a move this explosive really mean for the market going forward? So first, let's look at what happened in the moments right around that new peak. You might think it's all fireworks and a straight shot up, but honestly, what happens right after a new record is set is often the most telling part. Yeah, this was no straight line to the moon. Almost immediately after touching that incredible high, the price pulled back a bit. And if you've been watching this space for a while, you know that's classic Bitcoin. It's just a quick little reminder that volatility is and always will be part of the story. Even in a massive rally, there's this constant tug of war happening. Okay, so a little bit of turbulence is one thing, but the real story, the one we need to dig into, is the why. What powerful forces came together to launch Bitcoin into a whole new stratosphere? When you boil it all down, it was really a perfect storm of three major drivers. First, you've got this general economic uncertainty that's making investors nervous. Second, you have a massive, and I mean unprecedented, flood of new money from some very big players. And finally, you have the simple, raw power of market momentum, where, buying just fuels more buying. So let's break each of those down. First up is this idea that analysts are calling the debasement trade. To put it simply, it's when investors start to worry that their cash, their dollars, might be losing value because of things like government debt or instability. So, what do? They look for a safe haven, somewhere else to put their money. For centuries, that safe haven was gold. But now, for a growing number of people, that also includes Bitcoin. Now, that's a really important piece of the puzzle. But this next driver, this one is the real game changer. We are talking about a tidal wave of institutional money, the kind of money that can really move markets, and it all came rushing in through a brand new doorway. And that doorway is the spot Bitcoin ETF. The easiest way to think about it is this. For the very first time, big investment firms and even regular folks can buy Bitcoin as easily as they buy a share of stock in a company like Apple. It's all done right through their normal brokerage account. No more messing with digital wallets or separate crypto exchanges. It's a simple, regulated on-ramp. And this quote just nails it. The big money, we're talking pension funds, hedge funds, they need rules. They need things to be regulated and familiar. For them, holding crypto directly felt a little bit like the Wild West. But a regulated ETF, that's a language they understand. It's a comfortable, safe bridge into this new world. And boy, did they stampede across that bridge. And the third driver is just pure market psychology. It's momentum. Think of it like a snowball rolling downhill. As soon as Bitcoin smashed through some key price ceilings that traders were watching, it triggered all these automated buy signals. That buying pushes the price higher, which then convinces even more traders to jump on the bandwagon. It's a really powerful feedback loop that can just feed on itself. So, you've got economic anxiety, a fire hose of new cash, and pure, unadulterated momentum. I mean, it sounds like the perfect recipe for a rally that never ends, right? Well, in the world of investing, nothing lasts forever. So, what are the storm clouds on the horizon? Okay, it's time to flip the coin over and look at the other side. Every massive rally faces risks, and for Bitcoin, there are some pretty serious headwinds that could, potentially, stop this whole thing in its tracks. And the list of potential problems is not short. Of course, you've got the wild volatility that we already know about. There's always the looming threat of new government regulations. But the big ones everyone's watching right now are the rally's total dependence on that ETF money, the possibility of liquidity drying up at these high prices, and a huge pile of risky bets in the futures market. All of that is a recipe for some serious turbulence ahead. And this right here, this is the Achilles heel. This whole rally is what we call flow-driven. That river of money pouring in from the ETFs is the fuel in the engine. If that river slows down to a trickle, or worse, starts flowing in the other direction as people sell, the main pillar holding up this entire price structure could get kicked out from under it. This chart really puts it all into perspective. I mean, look, volatility risk for Bitcoin is always high. That's just a given. But see that bar on the right? The risk of those ETF flows reversing is rated just as high. That's the new critical factor in the room, and it's the one that everyone is watching like a hawk. Any sign of a slowdown there could be the first warning shot for this rally. So when you pull the lens back and look at the whole situation, you see this classic tug of war. It's the powerful forces pushing the price up versus the very real risks that could pull it all back down. This is the ultimate bull versus bear debate. And here it is, laid out side by side. The bulls are betting that those strong ETF inflows will continue, that Bitcoin's status as a hedge will grow, and that momentum will carry the day. The bears, on the other hand, are pointing to that insane volatility, the threat of regulation, and, this is their trump card, the fact that the rally's biggest strength is also its biggest weakness, that total dependence on ETF flows. Which brings us to the final $125,000 question. Has the arrival of all this institutional money through ETFs created a fundamentally new, more stable foundation for Bitcoin's price? Or is this just the latest, most dramatic chapter in Bitcoin's long and volatile story, built on the same shaky ground as all the rallies before it? The answer to that is going to define this market for a long time to come.